Now I'm going to go ahead, I'm going to bring on our next presenter. Our next presenter is going to be Hubert Centers. Now, Hubert Centers is a skilled professional day trader and a successful entrepreneur. His philosophy is this: if you need to accomplish something in life, find someone who's passionate about the topic of your interest and learn everything they know about it. Now, that philosophy has made Hubert Centers a successful day trader or day trader today. He is a firm believer that you need to have your own style and method of trading that works for you. He currently owns HubertCenters.com and is the co-founder of the TradeTheMarkets.com. He and his companies have been featured on Bloomberg. They've been featured on CNN, CNBC, Stocks and Commodities, and Traders Expo, to name just a few of them. He holds a Series 3 and a Series 30 license and is a principal at Razor Trading Holdings. Hubert, his wife of over 20 years, Lisa, and their 3 children, they reside in Versailles, Kentucky, and you can usually find them at one of their children's sporting events. Please welcome Hubert Centers. Hubert, you can go ahead and take it away.
Thank you very much. Thank you very much. All right, so if you can hear me, just give me a visual yes in the chat box or the Q&A, guys, and I'll get started here. Hey, William, how much time I got? 45 minutes, right?
You'll have 45 minutes, sir.
45 minutes. Great. All right, cool. I want to make sure that I don't go over. So usually this presentation, I try to keep it light, guys. I've got a couple trade setups I want to share with you, so I'll try to keep the stories to a minimum and just kind of just dive right in, and then also I'll try to leave enough time so that I can answer a lot of your questions. All right. So my overall goal is to share with you 2 strategies that I use on a daily and a swing trading basis. Now, I'm a professional trader. I've been a professional trader for 22 plus years. I trade everything. I'm not just a day trader. I'm a swing trader. I'm an investor. I do angel investing. I do it all. It's really pretty fun to just be spread out all over the place. So what I'm going to share with you is a couple of low-risk, high-reward trade setups that if you're trading stocks, options, futures, Forex, you may not be trading this market. And if you're not, you should be. All right, so one of the first trades I'm going to show you is how to risk only $156.25 to potentially, and it's a big potentially because I'm registered with the CFTC and the NFA, which sounds all official, right? All it means is I took a test and got a 70 or above on it. That's all it means. And but it also means I have to say potential a lot. So like, hey, you can make a lot of money potentially. Hey, you can lose all your money potentially. So I'm going to show you how to only risk $125 to potentially make $1,000. All right, and then I'll share with you another trade setup that I also do like that. So warning: does everybody understand? You should never trade with more money than you can afford to lose. It always should be trading with discretionary funds and discretionary funds only. You should not be trading with your retirement account if you're trying to make money to pay off your mortgage. In other words, if you're trying to make money for shelter or food, this business is probably not the right business for you. Now, I like to go above and beyond that. I'm going to be sharing with you some hypothetical and simulated performance results. I'm also going to show you some real trades that I actually do. So it's going to be a mix in there. It'll be very easy for you to see. Like I'm going to give you specific examples that work perfectly to teach you the setup, and then I'm going to show you, like, all right, here's how it really works, okay? So I like to go above and beyond the call of duty. Your trading career is going to be hazardous to your wealth at first, and you may potentially lose all your money. I like to say a lot of people go into trading and it ends up being like a bad country song. Your wife leaves you, your kids hate you, they repossess your vehicle and your home too. So if you understand the overall risk that you have established in the market, please give me a yes, and then I'm covered. All right, so like I said, my name is Hubert Centers. It's spelled really weird. This is my no BS approach to trading and investing. I'm kind of known in the business of the guys that's pretty much, I call it how I see it. Now, sometimes that gets me in trouble, and most of the time, though, people look at it like, oh, my God, he actually tells things how he sees them. So let's get started here. So we're going to have a little bit of fun. Even though I take what I do for a living very serious, I never take myself too serious because life is short, and we're only here for a short amount of time, and if you're not having fun, what's the point, right? All right, so Hedging 101. I trade a lot of futures. So what do you guys trade in here? Just give me a show of hands. Do you just tell me in the chat box, do you trade stocks, options, futures, Forex, bonds, gold, commodity, crude? What all do you trade? Do you trade it like me? Like me, if I could make money trading Tic Tacs or toothpicks, I would do it. Okay, that's just how I roll. I love trading everything. So I'm going to be talking about futures here, if you've never traded futures, I'm going to kind of give you a 101 in the futures market really quickly. So number one, if you're a stock or an options trader, what is your worst nightmare? What is your worst nightmare specifically right now because you're going through earnings? Let's say that you were short Facebook the other day. What would be your nightmare scenario coming into today? You'd be thinking, oh good, please God, don't gap up, right? You'd be wanting it to gap down, right? So when you trade stocks or if you trade options, you've always got that overnight risk and you have that gap risk associated. So if you do trade stocks and options, my first advice is go out and get a small futures account so you can hedge that risk. And here's what I mean by that. So if you're trading any stocks or options, and if you're betting on it going higher and it ends up opening up the next day and going lower, well, if you have a futures account, you can hedge with this, because in the overnight session, as you see this, let's say you're in Apple overnight and you're thinking Apple's going to go up, all right? And you're betting on Apple, AAPL, to go higher, and the NASDAQ futures are just tanking in the Globex session. Well, what you could do is you could short a few contracts, either 1, 2, or 3, just a very small amount of contracts on the NASDAQ futures, and as they're going lower, you'll be making money on this side of the NASDAQ futures going lower as you're losing money on Apple. So it's kind of like a teeter-totter effect. So it's your hedging is your risk. And sometimes you can make more money on the hedge than you're losing in Apple. So hopefully you understand that you don't have to become a professional futures trader like me, but you should have a small futures account in order to hedge some of those things that you're playing in your stocks and your option plays, okay? All right, so I've already tried to scare you to death about trading, about it being hazardous to your wealth. What I believe personally to my core is if you get around other intelligent, wealthy, driven individuals, some of it will rub off. Now, heads up, it ain't just going to magically rub off. You're going to actually have to roll up your sleeves, dig in, and do some hard work. So I just put a collage of pictures of some of the people that are in some of my business groups and some of my masterminds. The one on the left is Paula Abdul, cute little lady right here. She's actually 6 inches shorter than that. She's got 6-inch heels on. And this is when she was on one of the TV shows, and we were giving her some advice financially and career-wise. And then Richard here, we actually have something in common. He's dyslexic, I'm dyslexic, and when we talk about it, it's pretty funny because we're like, man, we're just weird dudes. This is Mr. Wonderful. He's actually not that bad of a guy when you talk to him. He does give you some decent business advice. On the Shark Tank, though, he's portrayed as the evil one. And then this guy here is Dave Ramsey. I help his organization with some of their online strategy and stuff like that. And it's pretty funny. Like, they always joke, like they think what I do is really, really risky. So they're like, we can never endorse you because what you do is just has so much risk involved in it. I'm like, I'm not really worried about that. I still kind of like your teaching methodology. So this is me. I'm the guy with the big catfish head right here. These are 6 24-inch LCD monitors, and this microphone is the microphone that I'm talking to you on now. I never dress like that. Right now I have a pair of jeans on, a pair of Adidas tennis shoes, and a T-shirt, all right? But that's what the office kind of looks like. So congratulations, you're in the right place at the right time, and here is why. First, we're going to do a little exercise in math. So if I told you that I was going to teach you a strategy, and I'm actually going to teach you 2 today, if I was going to teach you a strategy that only worked 41.3% of the time, would you take it? So this is where I actually want you to tell me if you would take it or not. So audience participation portion. Would you take it? Oh, no. Ooh, nice setup. Very nice. No. So 41.3% of the time you wouldn't take it. All right, cool. All right, so let's do the math really quick. Now, if not too risky, right? So the number one question that I always get, which is kind of a weird pet peeve, is like, well, how often does that trade work? We're like, well, it only works, 4 or 5 times out of 10. Sometimes it only works 3 out of 10. So like, oh, that's terrible. Yeah, but when it works, it makes me 10 grand, and when it doesn't work, it only loses me $1 grand, right? So then they're like, oh, that's interesting. So remember, when the name of the presentation is how to risk $156 to potentially make $1,000, right? What's the risk to reward ratio on that trade right there? How many times does that have to work out in my favor in order for it to make sense for me? So let's go through this. So if we go through, let's say, it depends on, let's say we had a series of 10 trades, and on the first 6 I lost $156, which means I lost $936, right? You're sitting there going, man, you're awesome. I could do that on my own. But on the next 4 trades, I had a trade that netted me $1,000 a pop. Now, would you do a trade that only worked 41 0.3% of the time? Yes or no? Does it change your answer, or does it change the way that you kind of filter or look at that question the same way? So if you do the math, you come out ahead $3,064, and the commission is very, very low, right? So now I'm going to ask you the question again. If I could show you a trade setup that usually is about 41.3% of the time correct, would you be willing to do the trade? Yes or no? What would you do? Would you do it? So yeah, the math changed, right? Because you're smart, you got common sense. You're like, yeah, I'd probably do that. I mean, it looks more interesting, right? All right, so let's say it's worse. Let's say it only works 3 times out of 10. So I'm going to lose 7 in a row out of 10 trades. All right, I'm going to lose 156 every time. I'm going to lose $1,092, and then I'm going to come over here and I'm going to have my 3 winners that are going to make me a minimum of $1,000, 3,000. Well, heck, look, I still come out ahead 1908. So that's not too bad. The trade setup, the percentage sucks, right? That's a bad percentage. But what are you going to be doing? You're going to be laughing all the way to the bank, even though the percentage, the win-loss percentage, is terrible. The reason it's so easy to do is because the risk-to-reward ratio is I'm risking 156 to potentially make 1,000. That's why it's so good. All right, so let's go through this trade. So there's 5 stages of trading. Everybody gets to these in a little bit different way. So number 1, you learn how to lose massive amounts of money. You just lose it, lose it, lose it, lose it. And then you learn how to lose little bits of money, because losing lots of money just pisses you off and you get tired of it. And then you learn how to tread water, which is where a lot of people get stuck. Make a lot of money, lose a lot of money, make a little bit of money, lose a little bit of money. A lot of people get stuck right there. What these 2 trades are designed is to move you from stage 3 to stage 4, where you can start to making some consistent cash flow, potentially. I'm registered. And then making a killing is asterisk, because I'm registered. Killing is different for everybody. It may be 200,000, maybe 400,000, maybe 20,000. I don't know what your killing is. So there's a lot of people will do these different styles where you'll have a massive amount of loss, and then you'll have little gain, little gain, little gain. And the reason this happens is you just had a huge loss, and now you're trying to take the profits as quick as possible, because you don't want it to turn into a big gain or a big loss. And then another one, you take another huge stop loss, and then you end up taking the money too quickly, and you never let your winners run far enough. Now, a lot of people, some people even do C, where you go huge losses and then the death of 1,000 cuts, and then huge losses and then death of 1,000 cuts. The strategies that I'm going to share with you today take in effect like this. What they do is they go like this. They go loser, 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 big O winner. Oh, loser, 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 big O winner. That's how I trade right there. That's how I always try to trade. And I'm pretty decent at sticking to it. Now, sometimes I will get upside down on some stuff, and there's always, you don't make money every day. You don't make money every month even. What you're trying to do is you're trying to consistently make cash. Some days are good days, some days are bad days. All right? So real quick story about a pot roast. So my wife's name is Lisa, so we're going to go with that. And we'll say Lisa had Susanna over, and they were making a pot roast. And my wife's recipe is passed down from generation to generation to generation. So what happens is Susanna and Lisa are fixing a pot roast, and Lisa's going, all right, first we take the pot roast, we cut up some carrots and some potatoes, we put some salt, some pepper, some garlic on here, and then we cut the ends. See how the ends are cut off here? Cut the ends off the pot roast, put it in the pan, and then put the pan in the oven. And Susanna's going, Lisa, why are we cutting the ends off of the pot roast? And she goes, I don't know. That's how my mom told me how to make a pot roast. Let me go ask her. She goes, ask her mom. She goes, oh, that's how, the recipe for a pot roast is potatoes, carrots, salt, pepper, garlic, rub it on there, cut the ends of the pot roast off, put the pot roast into the oven. And then neither one of them really know why, so they go to Grandma, right? They go to Grandma, and Grandma goes, oh, well, the recipe for pot roast is potatoes, carrots, salt, pepper, garlic, and then I would always cut the end of the pot roast off, put the pot roast in the pan, and then the pan in the oven. They're like, okay, that's the part. Why are we cutting the end of the pot roast off? That should make it more dry, not more moist. And she goes, oh, honey, me and your father were so poor we could only afford one pan. The pot roast was too big to fit in the pan. Therefore, I would cut it off so it would fit in there. So are you doing stuff like that in your trading? and you're investing? Are you doing stuff that's just passed down from generation to generation, or have you actually tested stuff out? So I'm going to ask you really quick, like, what is the best market for you to trade? Do you know what the best market for you to trade is? Have you ever back tested it? Have you four-way tested it? Have you sideways tested it? And most people's answer is no, right? So if you ask a lot of people say like, well, your broker's like, well, you should trade the S&P 500. It's the biggest market out there, and everyone trades it, so you should trade it too. Or, oh, well, you should trade stocks, or you should trade options on these stocks. Like, you just take advice from whoever's doing it, and you try to pick up a little nugget here or two, right? So let's assume that people told you, like, you should trade the big S&P because the S&P minis, they have a huge volume, and they're very nice. Well, the reason they were telling you to do that is because everyone trades them and they have a lot of volume. That's interesting. That doesn't mean it's going to be kind to your account, right? So then you end up trading that instrument. You get chopped up, and then you start asking yourself, what's wrong with me? Why can't I do this? And you start saying, I'm smart, I'm successful, I'm sexy, but this is just too dang hard. It must be rigged. Has anybody came to that conclusion? Now, some people think the market's rigged. I don't really think it's rigged. I think it's overall we're all competing against everybody. Now, if you're doing hyper quick scalping against the algos or, you know, the dark pools and stuff like that, yeah, but most of us are not competing in that market, so it's not a big deal, right? So the bad news is you have been betrayed. But it's not your fault. They lied to you, and you're sitting there going, okay, who are they? Well, they are other traders, the media, other investors, and it gets passed down from generation to generation to generation. Did you test what market you should be trading, or did you just believe it? All right? So my grandfather always told me, like, hey, son, it's fine to trust people, but verify what they tell you. So true or false, if you can trade, you should be able to trade any market. Do you believe that? True or false? If you can trade any market. All right, so I'm getting false, no way, yes, absolutely, yes, no, false. All right, so here's what I think about that. I think if the answer is true, if you can trade, you should be able to trade anything else. But, and here's the big but, like, right? No, it's not you, it's me, right? Yes, you should be able to pretty much trade anything, but it's going to be a lot easier if you trade something that matches up your trading style and your personality, okay? So if you don't match up your trading style to the right market, it's going to be very painful and very frustrating to do. Trading the wrong market or the wrong style for you is like hitting yourself in the head with a hammer. It's going to feel great once you stop, okay? So think about this statement really quickly. What is wrong with trading better faster? Is there anything wrong with trading better faster? If I could show you a market, or if I could show you a way to kind of find a market that you just kind of like really jive with or dovetail with and just really sync up with, do you think you would make money faster trading? Is there anything wrong with that? That'd be a pretty good shortcut to get to better trading, quicker profits quicker, right? So let's go through like how to find that, all right? Because I think it's actually possible. Now, I don't think everybody can do it. Only about 10% of us even making money. So this is how you pick the best market for you to trade. First, you want to start out with an ATR. Now, before we start this, let's talk about average true range, ATR. And this is a good analogy. So let's say that you're just starting to take pilot's license, and this is the airstrip that you're taking them on, and then you're up there, and there's two airstrips, and then this is another airstrip, all right? There's one that's real wide. We're going to call airstrip A and airstrip B. You're up there, and your flight instructor has a massive heart attack. He's passed out. He's not dead yet. But you call back to the flight tower and go, hey, heads up, my flight instructor has had a heart attack. He's passed out. I've had 2 lessons. I have no idea what I'm doing. Please help me. Which airstrip would you rather land on, airstrip A or airstrip B? Which one? Which one do you think you've got a better chance of walking away from, A or B, right? B, obviously, right? You got a bigger factor. You've got a bigger foot, so you mess up and probably live. So that's all that the ATR means. It means average true range. If you've got something a 60-point ATR, is it going to be easier to make out of that than if you had something that had a 10-point ATR, average true range? Yeah, you know it's easier in there. Get yours, get out, and get back home. So If we look at the index futures, Dow, the NASDAQ, and the Russell, they all have these ATRs, 93 points, 10, 25 points, and 9 points. This is what you multiply them by. The Dow, on average, is 3 points. It's going to be plus or minus $5. So you're going to make or lose $465 a Dow. Now, that's if you get the dead low and the dead high. Does anybody in here believe that you're going to get the dead high and the dead low every? No, you guys are a smart crew of people. You know that's not possible. You might do it every now and then. In 10 years, you might hit it twice. All right. So in the S&P, you've got the ability to make or lose $115. In the NASDAQ, you've got the ability to make $518. In the Russell, you've got the $990. Now, yeah, the middle is easy, right? So with these index futures, here's how they act. Run, stop, reverse. Run, stop, reverse. Run, stop, reverse. Breaking out, run, stop, reverse. Run, stop, reverse. Has anybody been chopped up in the Dow, S&P, NASDAQ? Has anybody lost any money trading the index futures? If you have, don't worry, it's not your fault. Rate counter trend trading instruments, they're not the most trending instruments. So they do a lot of, I call them sprinters because they run, stop, reverse. Run, stop, reverse. As opposed to if you're going to come over here and trade the bond market trades like this. It goes up, pulls up, pulls back up, pulls back up, and then it's plus range, and you can make or lose $1,150 a day on it. Crude oil, crazy. It's bipolar. It's your crazy ex-girlfriend or your crazy ex moves points in a day. You can make about $1,800 trading in a day. It's up. It's bipolar. Silver the same way. Silver's a little crazy. You got to be careful. A little bit easier. It is a marathon runner like the 30-year bond, but it goes like this. It goes run, consolidate, run, and then it pulls back. So the bond market are easier to trade if you're a trend trader that likes to buy breakouts or pullbacks. If you're a trader, you want to trade S&P, NASDAQ, Russell, and these down here, they trend pretty good too. All right. Talk about for the rest of the presentation how to trade bonds. I'm not going to talk about how to trade notes. A little bit different. I'm going to talk about the bond. Does everybody in here have a mortgage on your house? If you have a house mortgage, do you have one? If the 30-year, does anybody think that the interest rates are going to stay this low forever? In that room in this go-to webinar, does anybody believe that interest rates will stay here for the next 3 to 5 years? They're obviously going to rise, right? So that's going to be a really good opportunity to trade the bond. It's an inverse relationship on the bond market. So if your interest rate on your house raise, then the bond market is going to sell off. That's about the fundamentalist stuff that didn't know. So how to hold a winner. Like I said earlier, we're not going to talk about trading run, stop, reverse, run, stop, reverse. What I'm going to teach you is how to trade marathon runners where they run, pull back, run, pull back, run, pull back, run, and then they consolidate and adjust. So here's how it works. I'm going to skip some of these slides because I don't want to go over time. All right. Here. My clock keeps messing up on me. I can't see it. Aha, got 1 more minute. All right, we'll skip that slide. We'll skip that slide. I do have to teach you guys bond markets really quickly. Here's what I'm going to teach you. The months, the time, cautionary points, symbols, dome, margins, and the rules for a couple trades. All right. These are the months for the bond markets. The only really are these, and you can use this as a cheat sheet, is this right here, is HMUZ. So here's how futures markets work. They trade just like if you Dow, the S&P, or the Russell, or the NASDAQ. In March, the year is 2014, okay? In March of 2014, the symbol would be US 814. And let's say that in 2013, per contract would be US Z14. And the second Tuesday of December, we will stop trading them and we will begin trading March. In the Tuesday of the month, we will stop trading March and we will begin trading June US M14. In the second Tuesday of the month, we will stop trading June, we will begin trader, and it will be US M14. 14. In the second week in September, on Tuesday, we will stop trading the September, and we will begin trading the December with USZ 14. Now, different. Why is December contract 14 and not 13? We came from here. If we came from December 2013, we would trade this, and we would boom straight into, there you go, straight into March. So you go March, June, September, and then if we went into the next March contract, it would be USH 15 week, the Tuesday of the second week on December. We start to trade 15th. Okay, so that's how the futures markets work. You don't really have to know all this stuff. Toss maybe they just go /ZB, and that's the contract you need to know. So here's for the bonds. They open up at 6 p.m. They close at 5, which means they're open for 20 hours. The open outcry, which is where the dinosaurs still trading, is open for me. It closes at 3, but the minis trade 23 hours a day. This is the U.S. contract. You can see that it trades in fractions, and it trades in 1 second. Okay, so they open up at 6, they close at 5. They're worth $1,000 a point. Every move is $31.25. So things that you need to be aware of: interest rate. There are major economic news releases. I use a calendar called Econo Day to let me know what's going on there. All right, so these are values. The bonds, if it goes from, the bonds right now are trading at 137, 29, 30 seconds. If they go from 137, 37, and 30 seconds, then that is $30.05. Okay? So this is how TradeStation does them. USH 13, you can just change this with a 4, or if it's the 2015, change 5. So there's USH 13, USM 14, USU 14, US 14. ZB, so you need to call your broker to let them know that you're wanting to trade bonds, and let them, was it US or is it ZB? You want the 30-year contract. The 30 is what you're after, okay? So the next slide is the most important one. This is really what you need to pay. If I can just have your attention on this one, then the trade setups are coming, and you don't understand this slide, you'll be lost. So let's pretend that you went long at 135. Okay, does everybody see 135 where I'm circling it? If you went long at 135 and it went from 135 to 135 and 132nd, how much money would you make? If you went from 135 to 135, 132nds. That's considered a tick, one tick. It's a minimum move, and it's equal to $31.25. Okay. Now, if you went from 135 to 135 in 2 seconds, how much money do you make? Make about $62, right? $62.50. So if you go from all the way from 135 all the way up here to 136, which would be 30 seconds, which is 1 full point, right? Because it went 135, 29, 30, 31, and then 135, 32, 30 seconds is 136. How much money is that? So number one, that's 32 ticks. So all you do is you go 32 times $31.25 equals 1 full point equals 1K. Now the beautiful thing about these things is they usually range a little bit more than a full point a day. Okay, so, and the cool thing about them is they're not very hard to trade. They're very methodical. We call them a grandma market because they're super slow. But don't let the slowness really deceive you. They're slow and they're methodical, but they can make you a lot of money if you know what you're doing with them and if you're in the right spot at the right time. You'll turn around, you'll be up $700, $800, $900, $2,000, $4,000 on these things when you're in a good trend trade. This is what they look like on the dome. On TradeStation, they look like 131, 31, 30 seconds. On Infinity's platform, it's 131, 12. That just means 12, 30 seconds. This means 13, 30 seconds. So every platform's a little bit different, okay? So the intraday margins on these things, intraday, you can get margin as low as $300 to $500. Overnight, it's going to cost you about $3,000 to hold overnight. The cool thing about the strategy I'm going to show you, if you put it on past 6 p.m., most of the time it's going to be considered intraday margin. So you're going to be able to hold that trade for 23 hours to see if you can make your 1,000, and you're only going to have to put down a down payment of $300 to $500. Okay. All right. Let's see here. Let's go through the 30-year 8-tick reversal. All right. So this is a trade. Well, my goodness, I have messed up severely here. Hold on just a second here, folks. I have clicked the wrong clicker. Where am I? Right here I am. Discard. Hold on just a second. I lost my place. Ba-da-ba, ba-da-ba. All right, here we go. Okay. All right, here's the rules. The first trade is going to be an 8-tick reversal, okay? 8-tick reversal. These are the rules on the screen that are from a course that I teach. I'm going to show you my current rules right now. What I'm doing is I do an 8 or I do the 16-tick reversal. I don't do the 12 anymore. So here's what I'm looking for. I'm looking for the bonds to be in an overall uptrend or downtrend. Once I establish the trend, I'm going to let them pull back 8 ticks. I'm going to enter them. I'm going to risk 5 ticks, and I'm looking for a target of 32 ticks. So let me show you what this looks like. All right, so the first thing that I want to look for, I got just so much time here, is whether I'm in a daily uptrend or a downtrend. So in this example, there we go, here we go. All right. So first off, remember this thing only works 3 or 4 times out of 10. When I shorted here and covered here, that's a loss of $156.25. Strike 1. Strike 2, I shorted here, I covered here, I lose another $156.25. Short number 3, I shorted here, and my stop is here, and then my target here is 32 ticks lower. This is called a win, and on here, I end up making $1,000. Now, you can say 156, that's about $300 minus 1,000. So I ended up netting about $700 out of 3 trades. Not bad, right? I do not want to blow smoke up your rear end and want you to think that this works 90% of the time. It does not, okay? So in this example, we are going to pretend that the market is in a massive downtrend in the bonds for this example. And what we're looking at here is a daily chart of the bond market. As you can see, you've got a massive downtrend here. It broke the uptrend line right here. We're going to say the bonds are in a downtrend. We're going to want to short them. We don't want to go long them. It's actually the opposite in the current situation, and I'll show you that in just a second. So number 1, we've got a daily downtrend. We are selling off during the day. Then what I want to do is I just want to let the bond market at 6 p.m. when they open up at night, I want to let them open up, and then I want them to bounce up 8 ticks in my favor. In this case, they actually go lower, and then they bounce up 8 ticks. I short them here. I risk 5 ticks, and then my target is 32 ticks. And on this case, I make $1,000. Now, you may be saying, well, yeah, but that just looks too perfect. I agree, it does look too perfect, but that's how that trade worked out. Okay, so here's another example. It opens up at 6 p.m. It sells off. Here is the low of that move at 146 and 4/30 seconds. It bounces up 8 ticks. 4 plus 8 is 12. So I short it right here. My stop is 5 ticks from my entry. 12 plus 5 is 17. Okay, so it's 17:30 seconds is my stop loss. And then my target is down here, 32 ticks. Now, check this out. It would have worked here. It would have worked here. It would have worked here. Here, it would not have worked. Okay, so that would have been 1, 2, 3, 4, 5. 4 out of 5 trades on that day worked. Okay, and that's the overnight 8-tick reversal. You can either let it bounce up 8 ticks, you can either let it bounce 12 ticks, or you can let it bounce 16 ticks. Here's why it works. The bond market goes like this. It goes up, and then it pulls back 8 ticks, and then it continues on its way. Then it pulls back 8 ticks, and then it continues on its way. Now, the tricky part to this thing is sometimes it'll pull back 8 ticks, sometimes it's 12, and sometimes it's 16. And then it stops and continues on its merry way. So for me, I'm always looking to buy an 8-tick or a 16-tick. I'm never messing with the 12-tick. All right, so that's how that first trade setup works. This is what happens on the next day when I wake up. I trail the stop down. I was risking 156. I lock in $375, and then in about 2 seconds after I took this snapshot, boom, my target was hit, and I made an even $1,000. All right, so that is the 8-tick reversal. 8-tick reversal. All right, that's one of the first trades that is a low-risk trade setup. 8-tick reversal. So I've got 10 more minutes. All right, so let's go through the next trade setup. All right, same thing. This is called a sneak attack trade. And what you're going to do is you're going to do this one from 720. Number one, the market's in a daily downtrend, so we only want to go short because we've established that it's broken this uptrend line. We shift over to a daily chart or an intraday chart. We start drawing our thing at 720, our line at 720, and then from 720 to 820, we calculate how many ticks this is. If it's 17 ticks or less, we can do the trade. If it's 17 ticks or more, we can't do the trade. In this example, from 145.21 seconds to 145.13 seconds, we've moved 10 ticks. Is 10 less than 17? Yes, that means we can do the trade. Now, we're going to bracket the trade. We're going to bracket the high. We're going to bracket the low from 720 to 820. That's when we're going to bracket that trade. And we're looking for a break of this low. If it breaks out to the high side, we don't really care because we're going to pass. When it breaks the low side, we're going to short it there, 5-tick stop loss, and then our target is always the width of this box, which in this case, target 1 would have been 10, target 2 would have been 20, and target 3 would have been 30 points. That is the second trade. All right. Here's what it looks like again. I got 8 more minutes. You start calculating from 720 to 820. You bracket the trade. You try to find your lows. You try to find your highs. As long as it's not bigger than 17 ticks, you can do the trade. Since we're in a daily downtrend, if we break the low of that bracket, I want to short the low of that bracket with a 5-tick stop loss, and then target 1 is 10 ticks because it's the first hour from 720 to 820 was a 10-tick range. All right. Now, I build indicators to just plot these on the line so I never have to deal with them and count them. It just does it automatically on my charts to make my life a lot easier. In order to make money, you got to have profits and your confidence increase. Money management is the key to life. Good entries, good exits, and with more profits will come more confidence. All right. You got to have good setups. A good setup that goes executed will beat the pants off of a perfect setup that goes unexecuted. Good is usually good enough. Don't try to filter out all the losses or the stop-outs. That is a fool's game and for suckers only. And let's see what else we got here. Enjoy the process. Make it through some wins. Make it through some losses. Part of the game. And I have got a special promotion for you. If you go to hubertcenters.com/LIGHT, I have an entire course which is called My Favorite Trades. And I'll put it in the chat box here for you really quick and hit send. And you guys can start asking questions as I'm talking about this. So what happens is on My Favorite Trades, it usually retails for $197. I'm also going to give you a live Q&A session at the end of next month, and then also a live trading session at the end of next month, okay? That value is $391. You can have it today. Your special offer is $97 for the first 25 people. The link is in your chat box. It's hubertcenters.com/light. You can also call my office. I have people standing by right behind me at area code 859-963-3445. Area code 859-963-3445. There is the link. If you've got any questions on these two setups, go ahead and start asking them. This is what happens when you go, does the odds for success increase going for an 8-tick profit? I don't know. I've never tested an 8-tick profit, Brian. That's a good question, but I don't know. About 5 minutes remaining. Thank you very much. So when you click Add to Cart, here's what's going to happen. You'll get Add to Cart, and what I do is, like I said, I trade just about everything. As soon as you add this, here's Part 1, Part 2, Part 3, Part 4, Part 5, Part 6, and Part 7. They're online videos that you watch in real time. This is also live trading that I did. I pre-recorded it for you to show you this is all of the 7 modules of theory, and then I did live trading. And you also have my promise to you is 100% satisfaction guaranteed, no questions asked. If you don't love it, I don't keep your money. Life is too short, and I don't need the bad karma. So I always over-deliver. So here's what you're going to get in the course. Like I said, what I'm going to share with you is modules 1 through 5 is stock trading and day trades, stock swing trading and day trades, E-mini day trades, gold swing trades and day trades, and bond swing and day trades. So let me go through what's in the course here. So in Module 1, favorite way to scan the markets for swing trades and stocks. Best way to scan, hold on here. There, you got it. Okay. Best way to scan the markets for day trades. How to filter out the trades to take. That is in Module 1. In Module 2, 7 Horsemen. There are 7 stocks that consistently beat earnings 90% of the time. There are also 7 stocks that beat earnings 80% of the time. Do you use Thinkorswim for futures trading? I don't, but there's nothing wrong with it. They're not on par with some of the other platforms, but they're not bad either. 7 stocks that beat earnings 80% of the time, and then I also show you how to trade stock gaps during earnings, which is a great way to make money. Gap and go and gap and crap situation on stock earnings. And then in Module 3, we go over E-mini day trades, how to trade gaps on index futures, how to do an ambush trade, how to do an 85-115 fade trade, and also a crescendo trade setup, which is kind of like having tomorrow's newspaper today. It's a really cool trade. And then in Module 4, I go over the famous Goodnight Gold trade, where I show you how to risk $600 to potentially make $6,000. That's a really cool trade. And then we do the gold rush trade and the gold bug trade. These are all things that are covered in the course. Do you do options trades? I do options trades, but in this course I don't have any options trades. But I do teach you underlying stock trades. And then these 2 trades I taught to you today, the overnight bond trade, the 8-tick reversal, and then the sneak attack on the 10-year. I already taught you Module 5. I just did it really quick. All right? So that is it. I'm going to leave it here on the offer slide for you. And if you keep hitting me with questions, I'll keep answering. Can you use options trading for these strategies? Yeah, sure you can. Specifically, the scans for the earnings and the 7 Horsemen trades are really good for that, and the gap trades on earnings. You can definitely use all of those for your options. So it's hubertcenters.com/light. First 25 folks, area code 859-963-3445. I'm going to do one real quick for you and show you how easy it is to trade bonds. So right now the bonds are in a daily uptrend. So what I'm going to do is I want to come over here and buy the bond market, and I'm going to just buy it really quickly and show you. Oh, regular session, sorry. Hold on here. There we go. Boom. Canceled my bracket. Let me go. Yep. Good till cancel. So I got a market issue here. There we go. And now I'll place the order. Now when we open back up, I'll be good to go on the bond market. Okay. About 2 minutes remaining. Does Ninja Trader trade future bonds? Yeah, Ninja Trader through Mirrors Futures would trade bonds. Yes. They wouldn't have any problems whatsoever doing that. Yep. Bonds are very easy to trade. It's not like a CD that your grandmother and grandfather. It's just the futures. It's really, really liquid. There's some of the most liquid markets out there. Like today, the 30-year bond had 288,000 contracts traded on it. It's pretty thick. And they also trade the Euro Bund, and the Euro Bund had it had 600,000 contracts traded on it today. So yeah, bond trading is not hard. You just need to be educated on how to do it. Now, the cool thing about the My Favorite Trades course is it goes through most of my favorite trades. So if you trade stocks, futures, forex, bonds, gold, crude oil, they're all covered in there. I just took some of my favorite trades, put them all on a CD, and then uploaded it onto the internet. So if you wanted to know some of my favorite trades, it's a good way to get acquainted with that. Guys, thanks for having me. I really appreciate it, and I look forward to see you guys on the next webinar.